It's a special October 28th Wall Street Weekly wrap up. I'm going to call this the GROPE show. One of the things I've added was the next gen portfolio. I got to play with the fonts. Last year we were up 38%, 41% going into December 28th, and then we lost 3% the last two trading days. 2023 we're up 32%, and of course we're not Madoff people. We lost money in 2022. We were down 7.2, but we beat the averages all 3 years. We're up 20% as of last Friday. You think about it, 32, 28, 20%. It's unheard of. Let's go into it. Let's go back to 2000. I know this is not going to be a show about the stocks. It's going to be a show about the bubble, the exit strategy, what are we going to do, and it's just an overall. I decided just to separate this out from the Wall Street Weekly wrap-up because it's going to be a little bit longer. So, I lived through this. I watched it every day. I was on Silicon Investor. I was really looking at all these stocks, and I was living this. So, that's why I remember 25 years ago. By March and April, all these high flyers all of a sudden saw the revenues start to not come on, not get the targets, miss the earning growth, miss the revenue growth, and the expectations started to evaporate, i.e. they didn't have profits, they didn't have the what we call margin compression. The margins on these companies were 30%, now they're going down to 25% profit, and then so on. So venture funding cooled, the dot-com IPOs just eventually evaporated, and then profits were low. Remember, earnings were low, and then all of a sudden these high valuations. And so around about this time, and I remember it was like April 12th through the 16th of 2000, it dropped 25% on the NASDAQ. And I was mostly all NASDAQ back then. I wasn't diversified back then, which is one of the problems. But if you would have just gone into like around October, you would have been in there at about 2,800, and you saw this thing spike almost to 5,200. This is what I call a melt up. The boom is going, it's easy money, everybody is making money, everybody's buying stock. It's like I'm reading Andrew Ross Sorkin's 1921. Groucho Marx was buying everything people had on tips in 1929, and then they called him in. All of a sudden, you're hundreds of thousands of dollars of stocks on margin. You have to come in and pay off your thing. You mortgage his house. He was up hundreds of thousands of dollars, and he's minus a mortgage on his house to pay for his margin debt. Wow. That's a life thing. So I don't want to put the fear of people in there. I mean, what we're going to look at, let's just compare it to .com, because I remember, like I said, when I made one day, I doubled my money on drtube.com. I got out of it when they did earnings. We have $40,000. Internet advertising is going to be our source of revenue. I about had a heart attack. Nobody clicks on those ads. Back then, they were just banner ads and pop-ups and things like that. So, everybody's going to win the internet, because the internet is going to be the future, and everybody's going to have an internet site, which is kind of true. And today, AI, everybody's going to win. Everything in AI is going to be plentiful. Yet I watch Yorkville going to put out $23 billion site, not one of the hyperscalers, and then there's going to go down to Joliet, going to put a $15 billion site, then there's one downtown that's going to be another $10 billion, and so on. I mean, these are staggering. Now it's like $10 billion is nothing. When Microsoft built the Pleasant Prairie up at Mount Pleasant in Wisconsin, and they were at $10 billion, that was like double everybody else, 10 times everybody else. I go to Meta in DeKalb, where I live, 800 million. They're going 10 billion. Now it's 10 billions everywhere, because there's a lot of money they can put into this data center. And of course, we're having the rates increase. It's an easy cycle, but geez, they're going to go up for rate hikes, and here we're giving falling rates, so it's going to be cheap money.
This is a reminder. Do you really think it's 1999?
It's
This is a reminder.
98 or 99.
Do you really think it's 1999?
98 or 99. And then, of course, we're getting speculative companies. I mean, there's a lot of stuff right now. The top stocks for the S&P or the Russell 2000 are all these non-profit companies, and a lot of money getting capital and not making stuff, and there's stuff being funded just like Pets.com and everything else that we had back then that didn't make any money. I remember buying on Pets.com. It was cheaper than everybody else, but then they were losing money because they wanted to get customers. And you were concerned about how many customers you got, which is kind of like today. So what I think we're getting, this is a kind of like a huge market melt up. We're getting records every day this year. Again, when I went over, we're up let's go back to this number. 32%, 38%, we're up 20. That's what I call kind of like a market melt up. We're doing real well. And up there in 1999, plus 86%. And then the first 3 months of the NASDAQ, I think March 10th of 2000 was the peak, 24%. And then, of course, the hangover. Once these, I think it was Tudor Jones said, debt is 6% of all the money that we got right now in the United States. And it's the highest ever. And it's almost, you have to go back to like the end of World War II for that kind of nonsense. The NASDAQ, I always remember, Kevin on TV every day talking about, oh yeah, I was up 40%, then he lost 40% in 2000, 40% in 2001, 42% down 78%. That's margin compression. When you didn't go broke. The companies like Microsoft, they did it, but all of a sudden, the high PEs and everything else was not the word. So if I'm going to go out, I'm just going to take the snapshot of the stocks that I go, who's going to win in AI long term, as well as a couple other sectors that are important. And it's going to be, ARM, it's going to be Taiwan Semiconductor, and it's going to be NVIDIA. Those are my three kings. Those are what you need to make the Blackwell chips. And if you don't make those Blackwell chips, neither one of these three companies are going to be the king. Now, Google's got the TPU. They're going to go out there. There's deals with ChatGPT or OpenAI and Intel, OpenAI, and ARM, and everybody else has got things what they're going to try to go in there. Got to remember, the king is the NVIDIA Blackwell right now. Right now. Next year, the Vera Rubin's going to kick out, and we'll see how good that is. Again, Microsoft dominates Azure Copilot. AWS is big. Don't get me wrong, but I think they laid off like thousands of people, 10,000 people at Amazon or something, 14,000, something. You don't do that. If you can't take the geniuses you've hired and put them somewhere, there's something wrong. You're not just cutting out a little bit of fluff, like a couple thousand here or there. That's a pretty big hit to your top people. Remember, you figure everybody they hired at Amazon was pretty good, and now you're going out and you're cutting it. Of course, Gemini AI and ChatGPT I use all the time. I mean, those are right there all the time. Perplexity I use today. Very rare to use it, but they do a good job. I mean, it's not bad. There are like 6 of them that are good. Meta, of course, I don't want to go about Meta, but essentially the metaverse opportunity, a lot of ads, a lot of users. 6 billion users out of 8 billion are on Meta, except me. ARM, again, we talk about they make the CPU in the Grace Hopper chips. They're going to make the CPU for the Vera Rubin. And again, Taiwan Semiconductor, they make those chips for NVIDIA. So Lilly, I've just added in here because it's the monster in diabetes, GLP-1s and obesity management. It is just like AI, but it's got its own different sector. And then MP Materials, they're going to process it here. They're going to get money from the government, and I think that's the area that you can process. I mean, everybody's talking about. I was listening to somebody from Arkansas. We're going to get the lithium. Well, I'm not too worried about lithium. A lot of people have lithium. Chile's got lithium, and all these other ones. So these have the longest 10-year upside right now, as I'm going to look at it. Now, I mean, people are like, why are you looking out 10 years? It might not be. I know, but I'm thinking, what could survive in the next 10 years? All right, secular winners. What are good? Remember, we're buying the best of each sector. Financials, J.P. Morgan. Price to book is 3, which isn't crazy. Historically, sell at book at 2 and buy at 1, but it's the size and scale is helping it. Walmart is, I think the #1 retailer. Amazon's #2. ExxonMobil, they're definitely #1. And then I find out ExxonMobil is going to put money in the Arkansas Lithium project along with Chevron and a couple other companies because they're starting to realize that's going to be a big part of energy to make these things for these data centers. And then Pesky or Paramount and and the REZ, the Russell Small Caps, bigger trend, data streaming and that's going to be it, not fixed streaming.
This is a reminder. Are these 2 moons your best stocks?
Yeah, Tier 1
This
is my best.
This is a reminder. Are these 2 moons your best stocks?
Tier 1, Alexa. Morgan Stanley, wealth management, going to be a lot of merger acquisitions. We're seeing it now. They're going to benefit from that. Again, Deckers, I think the best shoe brand out there for selling products. Much better, much stronger than Nike. I see Hoka shoes everywhere. And then Coke, it's just a defensive play. Even though Dr. Pepper Keurig did more stuff. It's good dividend, good solid company. It will be number one the next 5 years, unless Dr. Pepper gets crazy and beats it, but I doubt it. UNH, great earnings today, but we'll talk about this Saturday. It's number one healthcare company. New management from the old management, that's great. Then our retails, REITs, stable income, solid areas, good growth. TKO, I'm telling you, UFC, they're gonna got World Wrestling, WWE, they're solid, and good deal for them. And Ryder, we had to pick a transport. That's the only one we got, and I'd like to get a better one, and but it's been solid. It's slow. It's like zero growth almost, but they're kind of cycle buffers, and they can underperform when the market goes down. Now we got to talk about the ones that I have, what I call the meme stocks, highly speculative, a lot of clean energy. These are the ones that we're watching when the market goes down. These are the ones that are going to take the biggest hits. Weak margin, cash burn, hydrogen sold out slow for plug, dilution risk, fuel cell. Every time they do well, they get more stock issued. Unproven economics and things for BE, but I saw they got the contract. That's the thing that matters. You finally got a big data center using their products. That's the winner. Again, Fluence, again, CapEx heavy, but thin profitability for now. And then we got our ETFs. I don't know why they put Fly as an ETF. Fly is a rocket company, but I think China, Germany, and Mexico are solid areas. Been very good about avoiding the temper of the boss. Again, I didn't put down ink to me, but Novacor, good, positive trials. Again, biotech's all over the board. It doesn't matter how good it is. If the market wants to go down, they're going to take down biotech because that's the speculative area. Flutter, again, number one gambling site in the country, and if not worldwide. Of course, regulatory volatility. I mean, Illinois just put a 50-cent tax on every bet, not little bets, big bets, every bet. And of course, Philip Morris, it's a slow area, but we bought it at 8% dividend. That's like a bond, a solid bond. Philip Morris will be here no matter what. So overall, 30% in our tier 1 leaders, tier 2s 40%, and 30% are speculative. And again, we have the biggest long-term winners. This is the next gen portfolio. It's the innovation fund that Kathy should have. When she didn't pick NVIDIA, she didn't get ARM, she didn't get Taiwan Semiconductor. That's where I didn't follow it anymore. She got a lot of speculative plays, but I don't think so. Of course, too much exposure in the clean tech hydrogen. Again, they're the basket of meme stocks, as I call it. And again, like I said, now Dan Niles, he just kind of went on TV yesterday and talked about that he's looking at probably a crash in the late summer or early fall of 2026, anywhere from 30 to 50%. Tudor Jones talk about same thing. We're going to get a correction. He doesn't know. He didn't pick a time, but he says probably 2026, could be 2027. If too much easy money, too much debt, a lot of things in there. He's talking about gold and Bitcoin as hedges in that area. But like I said, we're going to trim the tier 3 as we've done before. We start losing money, we can take a look because we're not fully invested yet. We might fully invest as this market runs into March or something. What I keep on going back, remember the crash that I remember, March 10th was the high. That's a key date in numbers because people remember that's the peak of the NASDAQ in 2000. So, that's when we're going to be hyper vigilant on our other stocks. We're going to have a lot more cash. We're going to start trimming out some of the stuff, and eventually during the crash, if it does happen, we're going to go in and buy our solid stocks, Microsoft, ARM, TSM, and things like that. Again, then we're eventually, I kept on talking about the JP Morgan top areas. I don't have any defense, and that is an area to probably get into. And I look at Lockheed and Northrop and other ones else. And then you could often get the Qs and other stock indexes to hedge a little bit better and ride the area. But there's going to be a melt up. Not 2024, it should be 25 to 26.
This is a reminder. Do you think these companies are really growing in tier 2?
Yes, they're the best in the sector.
Do you think these companies are really growing in tier 2?
Yeah, I mean, Ryder's not growing, but the rest of them are going. Okay, so You know, like I said, you know, we're going to go through and take a look at it. We're going to get the rotation now. We want to eventually build some cash before the crash. You know, 10 to 15% cash. You know, generally we got some cash. I mean, I want to say 3-4%, but we want to get it up. Guy, you know, what we're going to probably do is if we get these clean energy stocks double or something like that, which could be possible, could not happen too. We want to take profits on there. We're not going to interested to take profits on our tier one stocks. And then we get the crash, and then we're going to eventually go in, push more into the tier one stocks because those are going to be out there for 10 years. You know, NVIDIA is going to build the data centers. Remember, the chips are sold out. That's why everybody's pushing Intel, AMD, and Google's TPU chips to try to get the demand satisfied. And that's a big deal. And then, you know, like I said, if we go out 10 years, you know, we're going to see the cloud and eventually autonomy from robots to vehicles to processing. And that's going to be a hell of a future. And that's going to take a lot of compute power. And that's why we're trying to go through a lot of this. So I came up with this GROPE index. You know, what's the revenue growth? Because you see me track it all the time with the colors, and I just do it. And it's really for the companies that are growing. You know, I mean, not our writers, not our banks per se. You know, even though you could do it, it's just that trouble with banks. You know, like J.P. Morgan, it goes up and down. You know, you can't compare in a monster quarter the next year go through. It's not like consistent. You know, it's lumpy. So you just have to be conscious of it. But I just did the top 8. And these are all kind of like tech stocks in a way. And we look at it, the revenue growth of NVIDIA is 50 and the PE's in there. So if we take the growth divided by the PE times 100, because we want a number above 1, that's the theory. We don't want 0.0 something, because then people are like, I don't know what 0.02 GROPE is. But they understand if you got a 99 GROPE, that's going to be a high number. That's a good solid stock. That's why NVIDIA is our largest position. That's why it's good, because the growth is still good. The PE's not crazy. It's not like Palantir was at 500, then that would push the GROPE at 10. That's a little too much risk. Microsoft 45, Apple 23, Google 48. Now we don't own Apple, we don't own Amazon, 38 for Amazon. Meta we own at 79, Broadcom, Tesla. So if you think about it, what's the 4 highest GROPEs? NVIDIA, Microsoft, Google, and Meta, and we own all 4 of those. The 4 lowest GROPEs on these lists, we don't own. And you know, you take a look at the market cap; it's independent. One of the things that should happen is the law of large numbers. The growth cannot continue at this pace with a $4 trillion company. But somebody said no, it could get to 10 trillion. Yeah, that's like Cisco's going to be $1,000 too, and Qualcomm, you know, got up to like 990, did a 4-to-1 split, and the people just piled into the thing, thinking if it can do a 4-to-1 split, it can do there, and you just had dead money. You know, you had dead money for Cisco for 25 years. So, you know, I just look at this, and this is just a way to kind of put one number as an area just to compare. You know, because you don't get to look at this a lot of times. They always talk about, oh, the PEs are high. We always look at the PEs. Yeah, that's important, but you know, this also comes in there, and you want to think, which are the most vulnerable? Well, the high GROPEs are probably the more stronger ones, and the ones that are really low, like a Tesla, you know, it could drop. It could take a big hit in a decline where people start to having to make a cut. Because you know, like even 2022 when it was bad, we were trimming. We're trying to get into cash, trying to get in there to buy the stocks that we want to get into. But we, you know, I mean, like I said, our tier 3 stocks, you know, once they started losing money, or we started, you know, we hit a number where we got, you know, we were up double, and now we're up only 75. We got out of them, take the money and stuff like that. That's what we're talking about. I like the sector stocks because I think they're going to do better than the U.S. averages. Just me. And then we'd add the other one for small caps. Remember, interest rates going down, the small caps will do well, which is RZG. You know, they are the beneficiary of those kind of stocks. So I just wanted to put this in there and you know, give you a good feel for it, because I think this is going to be a interesting 6 months. I don't think anything will happen. I think it'll be choppy, but we should be up by the year. We're only a few points from S&P 7,000. You know, I'm looking at 67 was the goal on a good day. 64 was going to be fine. This was supposed to be a flat year, but you know, we're in it. We're run up 20%. Well, we've had 2 good days. We'll see what it happens. All it takes is one kind of headline, and then somebody could spoil the party.
This is a reminder. The GLOBE index, is that the best you got?
I know. I was trying to come up with something
This is
better
a
than
reminder.
GROPE, you know.
The GLOBE index, is that the best
You
you
know,
got?
but it's growth and PE, and I put the hyphen in there, so hopefully you don't get a wrong connotation. But it's a number that I can look at and I can say, okay, you know, it works because our 4 highest GROPEs are our stocks, and the 4 lowest GROPEs of the top 8 are not our stocks. You know, we could have all of them, but you know, again, I don't want to get into the ones that are, you know, a number. And sooner or later we'll get this number. It'll jump all over. But this is just something. I'll take a look at it. All right, with that, I know I talked a lot on a very small issue, and I'll see you on Saturday. Have a good day.